subscribe now and press the bell icon. Never miss an update.
Okay, let's get started then. What are the qualified organizations? So they can be public charities or private foundations. So what is a public charity? Even that we kind of just touched upon yesterday. Can anyone explain me what is public charity?
The ones who get one-third support from general public.
That's good. I see you can read that. Public charities, private foundation. Now please pay attention. Okay, we did discuss it yesterday. Any charity that derives its donation or support from general public, or at least one-third is coming from its members. Okay, that, and we saw, we went through some of the examples. It could be a temple, it could be a church, it could be some other place where public can just go and give donation. It could be a public library, any of that things, or where you can just become a member by giving some small nominal amount every month and all. But the entire support is coming from its members and the general public. There should not be any restrictions on that. So that's what is called public charity. And they are the ones who get who get favor in terms of getting deductions. Okay, they have to be created in US. Obviously it needs to be a US a charity fund only. They can do a lot of things. They can be into religion or any kind of scientific, literary, educational purpose. There could be a school, there could be a library, or animal welfare, all of that stuff. Okay, private foundation is something maybe like Bill Gates and Melinda Foundation is there. We talk about so many other foundations. Those are all private foundations. They are not going to go and take their donations from the public. There are only few people, those who will put in the money, and that money needs to be used only for the specific purpose. Those are private foundations. Again, we already went through this, so I'm not going to spend too much time here. What is that? What kind of receipt should be there and all? We also did this example. So let's just start from property. So cash donation, that's pretty simple. Yes, the money has been donated. Let's take deduction for that. What if it's a property? So if a donation is in the form of property, amount of donation depends on type of property and type of organization. Those are the two things we need to consider. It could be a capital gain property. It could be an ordinary income property. What is capital gain? Meaning something, if it gets sold, it will give a long-term gain to the seller. Ordinary income is it's obviously it will just give ordinary income. There's no capital gain. Let's say if there is a cloth merchant, he has a lot of pieces of cloth in the inventory, and they want to just go and give that as charity. That's going to be ordinary income property. But at the same time, if they have an old car or a pickup truck or something, and they said, fine, we just want to give this away to maybe to say like a school or hospital or whatever, some other place, that could be a capital gain property. Okay, and if the donee organization disposes, okay, that's again important. Wherever you're giving the charity, that if that organization is disposing that off within 3 years, then a particular form has to be issued. The donor will get a 1098C form, okay, 1098C, that will say that you'll have to report that charitable contribution in their own returns because it got sold within 3 years. The idea is that should be used by the charitable organization. We should not just go ahead and give it to somebody and then they're selling it off. If that is what is happening, it needs to be reported to IRS. Okay, so what are the limitations? Okay, we know there are two kind of organizations, what they're saying, 50% limit and non-50% limit. 50% limit are usually public organizations, which are more recognized as a charity. Churches, educational, hospitals, and those things. Some private foundations can also be included. Private operating foundation, private non-operating foundation can also be included if they satisfy certain conditions. But what we need to know is, when typically when we get the receipt from the donor, they will tell us, or maybe it should be mentioned somewhere, that whether they are 50% limit organizations or not. Or we can go and search. Let's say it's saying it's going to some ABC hospital. Okay, then we can always go and search what kind of entity that is. Is that a public organization? Is that a private foundation? If it is private, do they qualify for 50% or do they fall under non 50%? So these are the conditions. If they do not qualify any of those, by default, they will go under non 50%. Okay. So what we know is that there are two kind of organizations, 50% limit, non 50%. And when we're talking about these limits and all, we're talking about limits on AGI. 50% of AGI, non 50% of AGI and all. So non 50% could be like that. They can take only 30% deduction. They can take only 20% deduction. And the cash limitation, the cash contribution always gets higher priority. So they will always go for 60% 60% deductions. We'll go through one of the example that will make it clear. So, and what we are seeing that non 50%, here we see that the benefit is not as high as it would be for 50% qualified. So that's why if they're not satisfying these conditions or these categories, they will by default go in there, and then we'll have to see if they're falling for 30% or 20% or something else. Okay, so let's go over this example, then maybe we'll get a better understanding. And this topic could be a bit confusing, so don't worry much about that. What we need to know is if it's a donation, what kind of donation it is. Let's look into the receipt. Let's ask client to give us what kind of organization they're giving donation to, and we just have to make sure we are putting correct category for those organization. The software will automatically tell whether it's qualifying for 30% or 50%, and how much should the deduction be, depending upon the AGI.
Ma'am,
Yes,
donations done in India are eligible for deduction in US?
usually not, unless they have something related with US. Like, let's say they may also have some organization in US and all, if they can prove. But usually for all practical purpose, we will not take it. And there is also somewhere they have mentioned that they're talking only about US charities. Somewhere, I don't know where it is. I just saw it somewhere.
Mm-hmm.
Yes, created or organized in US.
Okay.
Those are considered to be qualified organizations. So 99% it will not be allowed. But if we can prove that it is related to US or it is part of US only and all, we can always take a chance. But then that's not allowed.
Okay.
Okay, so let's just go over one by one. Otherwise, it will be very confusing. We'll just break it down into different pieces. But one point that I forgot to say is that donations can be carried forward only to next 5 years. So whatever she's not able to take as donation in the year of donation, in the year she donated, that will get carried forward to next 5 years. So now let's see. She's having an AGI of $100,000. AGI is very, very important. Why? Because all the limits are applicable on AGI. So the donation is going to be limited to certain percentage of AGI. So now what happens is she's donating 40,000 cash to her church. What kind of organization is this? Typically, church. They'll fall under 50% limit organization. They're generally public organizations. Although some private foundations are acceptable in this category, but generally 50% limit organizations, when we speak of, they will be public only. Church is a public place. Anyone can go in there and all, like anyone can donate or all those things. So she's giving $40,000 to church. Then she's donating stock with a basis of 35. So her basis in her books is 35,000. And they're not talking about FMV right now, so let's not get confused. We'll just focus on 35. And they are held short term, and she's giving them to Red Cross. Red Cross is also more of a public charity. We know about the Red Cross and all. There are no such restriction. They go ahead and they distribute food and clothing and all to the people affected in, on some natural disaster areas and all. So first she's taking 35,000 deduction for the stocks in 50% category because she's giving it to Red Cross. Red Cross will also fall under public organizations. So she's eligible for 50%, eligible in the 50% category. So if she's taking full 35,000, then how much is the max that she can take? She can take 60% of cash contribution or 60% of AGI. So anyways, in any case, she cannot go above $60,000 for her donation deduction. And if she's already taking 35,000, then we are left with only 25,000 limit, right? Because 60,000 is max that she can take. She's first going with 35,000 deduction for the stocks in 50% category. And then she can maximum all that she can take is 25,000 in the 60% category. So 60% meaning 60% of $100,000, so 60,000. 60,000 is the limit. In any case, her deductions cannot go above 60,000. But her total donation in cash is 40,000. She's able to use only 25. What is she left with? Rohit, what is she left with? Huh? 25 or 15,000? I'm saying, what is she left with? She cannot take deduction of 15,000 because she has maxed out in that year. If her AGI was $150,000, then how much would that come to? $90,000, maybe 60% of 150,000 is 90,000. So then her limit was not applicable at 60,000. She was not limited to only 60,000 of deduction. She could have taken more because all these deductions are calculated as a percentage of AGI. So she's using 35,000, then she's taking 25. 35 plus 25 is going to be 60,000. She cannot take any more deduction. So obviously 15,000 has to be used in the next 5 years. Anytime she can use it, and she can use it in the 60% category. That means she can, if her income is, let's say her income is low the next year, say it's only $50,000, or maybe further lower than that, say it's around $30,000. What is going to be 60% limit? Or take 20,000, sorry. Let's not even take 30,000. So Rohit or Sakshi, one of you, what is going to be if her income falls down to only $20,000 in the following year? What is the max that she can take as a donation contribution?
12,000.
12,000. Okay, yeah, because it's not very clear. So she can take only 12,000 next year if the AGI is 20,000. But she has a carryover of 15,000. So 3,000 will again get carried forward to the third year. Okay? Because it is a cash, that's why we are even taking 60%. If it was stock or something else, we would not even take 50%, 60%, we'll take 50%. So if 20,000 was the AGI, 50% will come to 10,000. So her deductions will be limited to 10,000. All right, if AGI is going to be 20,000, and if we are talking about cash donation, then the limit applicable is 60%. So it is going to be 20K times 60, it will be equal to 12K. But carryover donation is 15K. Sorry, I'll leave it, doesn't matter. So again, like,
Ma'am,
yes, go ahead.
carryover donation, why it is 15K, ma'am? I'm thinking like it should be 8K.
It's leaving, we already talked about it. It's right here.
This 15K, okay.
I'm talking about this 15K. I'm not talking about any new calculation. This is the carryover to the next year. Now, out of that 15K, she can use $12,000. And so, yeah, she can only use 12,000 because her limit is crossed. I mean, she cannot go above 60% of her AGI. So 12,000 is the maximum donation that she can get on her tax return as a deduction. So the 20,000, so like, I mean, if you go on 1040, basically we'll say what is AGI, that's going to be 20K. Either she can go with a standard deduction or she can go with itemized. Okay, let's say she wants to go with itemized, and let's say standard deduction is lower than itemized, then she's taking, say, 2K as mortgage interest, okay, and 12K as donations. So her total deduction can be 14K. So her taxable income is going to be 20K minus 14K. So it's going to be 6K. And there will be a forward form or carryover donation form, which will be going to, which she can take deduction in the next years. But now, let's say if now the AGI is 50,000. Can someone explain me how will this all change?
50,000 for 6%.
Ma'am, 30,000, 30K.
30K. And how much she has carryover?
15.
She'll be able to use all of it. Right?
Yes.
Nothing gets carried forward to third year.
Okay.
Clear? That way, again, we are not manually calculating all these things. We just need to understand why the carryovers are happening, why she's not able to take full benefits and all. This will all be done by software, but we need to understand these limits.
Ma'am, I have a
And this
doubt.
is, yes.
Suppose 50K is the AGI and 60% is 30K. Suppose in this year itself she makes another cash donation of rupees, suppose 20,000, 20K.
Mm-hmm.
Then what would be the calculation? Because 15K was of previous year.
Correct. Do the same thing. You have to just take only 60% allowed. Whatever your AGI is, just take, because it is a cash donation, you're taking 60%. If she gives, some part is cash, some part is stock, some part is car or something else, then it will not even be 60%. It could be the limit could be lower. But right now, let's make it simple. Let's say that she's giving a cash donation of another 20,000 in the second year.
Yes,
Plus
ma'am.
15,000 is coming from first year.
Previous year. Yes, ma'am.
So it comes to 35,000 that she has in her, like on her account, that she can use. But how much is she able to use? That will be
30K.
probably only 30.
Yes,
So
ma'am.
5,000 from the current year should get carried forward, right? Why would we want to carry forward the previous year amount? Because there is a limit of only 5 years.
Agreed.
Whatever can be used first, we'll first use that. And then the latest can be carried forward.
Yes, ma'am.
Okay.
Yes, ma'am.
So anyways, let's just do this. Let's go over to the. Now there are certain further limitations. What they're saying, then there's sometimes 30% limit can be applicable to gifts to all qualified organization other than 50% limit organization. So, or if the capital gain property is donated, it may be subject to 20% limitation, because capital gain property could be a very high amount and all. Plus, it is not going to 50% organization. It is going to non 50%. Non 50% do not get as much preference as 50% would be, because 50% are public charities and all. The non 50% typically will be private foundations. The aim of government is always to give the best possible benefit to public charities. So they, even in India, you have some kind of schemes, right? If you put money into prime minister, some yojana and all, you'll probably get more deductions versus some other local charity or something. So, but if it's a capital gain property, it could be even lesser. In that case, if AGI is $100,000, all we can deduct is only $20,000. Here we saw she can take up to 60,000 because the money is going to all public charities. So again, we cannot decide by name whether it's a public charity or private foundation and all. Typically, church, temple, and all those places, when we see, because we know the way they operate, their modus operandi is something that is open to public. Anyone can come, they can give donation, they don't have to give donations, all those things. Or they can become a member also of certain groups and all, and they can put in certain amounts every month and all. But if we are not very clear, we can always ask for the articles of organization of those charitable institutions. Or we can ask the donor that provide us the receipt, and the receipt, it should say what kind of category will they fall under and all. Then there is a special 30% limitation on capital gain property. A special 30% limitation applies to gift of capital gain which are given to 50% limit organization. That means they're given to public charities and all. So they are getting only, their limitation has gone higher. They're getting more benefit. 30% they're getting versus 20% here. Or I mean, even here they are getting 30%, but there is a small table. We'll just go over that. That will be more quicker to understand. But that is applicable only if the donor elects not to reduce the fair market value of the donated property, if that property would have been a long-term capital gain if he had sold the property. So again, IRS wants to see that if you are gifting something versus selling something, if you sell that property, will you capture a long-term gain or short-term gain? Because if it's long term, obviously they're paying low taxes to IRS. If it's short term, the tax rate is going to be higher. So they also want to know what kind of gains a donor must be like booking if they want to sell the property rather than gifting it. There's no sale happening here. We are just talking about charities. That means we're just talking about donations. We're just talking about gifts. But when we have to consider what kind of category to go under, we'll have to probably look into that situation. If that property were to be sold, would the donor book a long-term gain or short-term gain? Okay. And then accordingly, what is that if the reduction is elected? So what is the reduction? We are electing. That means we are going with the option that we will not reduce the fair market value of the donate by the amount that would have been considered as a long-term capital gain and all. So basically, we are going with the fair market value. That's what it says. And I understand if you're all getting confused and all, this is not that very simple thing. We are not talking about it every day and all, so it could be a bit confusing. I'm not expecting all of you to remember each and every limit, but our concepts should be very clear. That there could be two kind of donations. There could be two kind of recipient organizations: public charity, private foundations. Then the donation could be of different type. If it's a cash donation, what are the rules? If it's a property donation, how do we differentiate between a capital gain property versus some other property, and how do we go around with these rules? Again, this will become important if the software also doesn't know. If you say that, okay, I'm donating a car, it will ask you a lot of those little, those boxes will be there. It will ask you whether this is 30% limitation property or 20% limitation, 50% limitation. So at least if we know what are we talking about, we can always go and do some research. We can go on IRS website, we can see, what kind of organization this is or what it will fall under and all, and accordingly we can choose the correct option there. But if you have no idea what is 30%, what is 50%, what is 20%, then what, we'll randomly go and we'll just pick up it, you drop down, I just pick up anything and just put it there. You may do that if you're not sure about what to do and all, and that will not even give you any error. And then when you run the return for error, the software doesn't know whether you're doing right or wrong. I mean, that's the basic thing that they'll expect, that okay, being a tax preparer, if you have knowledge of IRS rules and all, you'll probably at least pick up the correct option. Once the option is picked up correctly, all the calculations will be done automatically. So, okay, so that's why it becomes important what is in the drop down menu, the drop down thing, the little drop down, there will be different option, whether it's 20% property, 30%, 50%, and all. We'll have to do our best judgment. If we don't know, we'll have to probably go do research and try to figure that out. What are 50% limit organization? Again, this is just a recap of what we have earlier gone through. It is in the form of table. Maybe it's more easy to understand from here. So again, we'll just quickly refresh what we have gone through here. If it's a 50% limit organizations, mainly public. Private foundation can be included. There's no such rule that they cannot be, but when we're talking about generally what that is, the understanding is that those are mainly public. If we are giving cash as a donation amount, 60% of AGI, that's the highest one can take. That why there are highest benefit here? Because cash cannot be manipulated. If you're giving 20,000 cash, it's going to be 20,000 cash, right? But if you're giving a car as a donation, you can save. Even if the value of the car is 10,000, you'll go and say, no, my car is worth 12,000. I mean, you don't need to mandatorily have an appraisal done every time. So yeah, you have your subjectivity there. You can put in anything you want to. You're probably donating a TV. You'll say, okay, that's worth $500. Maybe it's worth not even $50. People may go and tell certain things. So IRS will say, fine, you go ahead and do that. But in those cases, we will limit your donations. But if it's cash, that's the highest. Cash is cash. Nothing can be manipulated. Capital gain property, if we are going with FMV, we can take 30% as the limit. And if it's a personal, any other property unrelated to whatever, don't worry about that. If it's going with lower F of FMV or adjusted basis, AB is adjusted basis, then the limit goes higher. Because we are going with the lower of any of those. And typically here when we say FMV, the FMV could be higher. Because of the stocks might have been bought for $30,000, but the FMV could be more. But the same thing may be applicable if there's a machine, maybe the machine basis is $50,000, but when you actually go and sell in the market, maybe it will get only 25,000. We don't know, but then there is an option which is given. If you want to go with FMV, that's what you can do. If you don't want to go with FMV, then you take lower of FMV or adjusted basis, and maximum you can take is 50%. So what the main thing that we need to note here is, most of the time we are getting big limits, higher limits here. But when it is private foundations, or when those are not public organizations, the limit gets reduced. Typically it becomes 30%, 20%, and all those things. Again, depending on different categories. So most of the benefit is given to public organization. Again, this is also very important in the term of tax planning, because a lot of times before the year end, the taxpayer may come to us and they say, like, what if I make so and so donation? Does it give me any benefit? Before they make the donation, we can do this exercise with them and we can say to which organization you want to do. Let's see what your AGI is going to be this year. Let's see, what kind of limits are applicable and all. Let's go over this example again to make it clear. And there's 20% limitation also. So again, this is a bit confusing. What it is saying, the limit is actually the lesser of 20% of AGI or 30% of AGI minus capital gain contribution to public charities. So either we go straight away with 20% AGI, or if they're saying you want to go with higher 30% of AGI, then you deduct that capital gain contribution to public charities and all that stuff. So this is all for, again, 20% limitation is applicable for private foundations mostly. Okay. We'll go over some examples. I think that will just make it clear. Who wants to read this? How about you, Shweta? Want to go ahead? You also need to explain it, so read it properly.
Okay. A single taxpayer had AGI of $80,000 in year 6. On June 5, year 6, the taxpayer donated land and stock to a church. The taxpayer purchased the land as an investment in year 1 for $5,000 and
So
purchased.
let's stop here. So he purchased the land as an investment in year 1 for 5,000. What kind of gain he would expect from here if he would be selling the land?
Capital gain.
That's true. Even stocks will give capital gain.
Hmm.
But is it going to be long term or short term?
Long term if he sells it because year 1 and
Yes,
6
7.
Right. And what is happening with stock? So let's read this.
and purchased the stock on January 14th, year 6 for $1,500. Okay. On the day of donation,
So
the
is this a long term or short term?
short
Short
term.
term.
Exactly, because we're talking about year 6 only, and if you got the stocks, not even 12 months have passed.
On the day of donation, the land's fair market value was $9,000 and the stock's fair market value was $1,860.
Correct.
So the charitable contribution deduction for year 6 is the amount of 10,500, which is calculated as follows. Land held for investment greater than 1 year, that is capital gain property. So we are taking FMV there, which is $9,000. And stock held for investment for less than 1 year is, which is an ordinary income property, so we'll be considering lower of FMV or adjusted basis. So adjusted basis is 1,860, and that is stock's fair market value.
How much is
1,860.
adjusted?
1,860 is the fair market value and the cost is $1,500. So we'll be considering the lower of that. Thereby, $1,500 is the deductible amount, which comes to total 10,500.
Right. So what are they saying here? If it's a capital gain property, you can go with, no, sorry, this is private. Wait.
Ordinary income property.
Mainly public. We're talking about capital gain property. We go with FMB unless we elect not to reduce FMB and all those things. But usually, capital gain property will go with FMB. If it's a personal property, in this case, stocks, we'll go with lower of FMB on adjusted basis. And that's what we are doing here. That we first need to understand what is the nature of the property which is being donated. If this land was also bought in year 6 and he's donating it in year 6 itself, both of them will become ordinary income property because it is not held for greater than 1 year. It is not a long term gain. It is not a long term property that we are looking at. So the nature of deduction will be different. So Is that clear? And okay, yeah, here, okay, sorry, I missed this part. This is what they're saying, because I was thinking why they're picking up like mainly public rules, because it's clearly mentioned that he has donated it to a church. Church will fall under this rule. Mainly public, 50% limit. Here we can see capital gain, we can go with FMV unless we make an election that we don't want to go with FMV, then it's different. But typically we'll go with FMV. If it's a personal property, we'll go with FMV or lower of one of those. And there'll be a 50% limit, but for capital gain property, the limit is 30%. Okay, why the limit is 30%? Because there is a long-term gain. If the person is selling the property, he'll capture the long-term gain. Long-term gain will be taxed at say 15%, 20% and all. So anyways, what is IRS losing on that? IRS is thinking from that point of that view, that if is not selling, we are losing on the tax revenues of long-term capital gain. So when they are donating it, will also give less of the donations. The limit has been reduced. And capital gain property usually will also have a higher dollar amount associated with it versus an ordinary property. So again, that's where the limit is reduced. But ordinary property, people can stocks and other things and all, which are there, they will get more donation because the limit has been raised to 50%. Cash, they will get the highest donation because typically nothing happens with the value of the cash. It stays same. Okay, is it clear now? Vanna, Bhavani, Hemant.
Yes, ma'am.
Okay, this is going to be again, looks like it's very confusing. We'll again have to read very, like, in small ways, and we'll just read one sentence at a time. Let's start understanding it, what they're saying. Because here they're talking about the university, which is typically a public organization, and they're also talking about private foundation. So the donations have been made to both public and private. So different limits will be applicable. What is going to public, what is going to private? There could be a limit of 50% on public, but a limit of only 20% on private. And also we'll have to go through them. We'll have to segregate each one of them and see. Okay, let's just do this and then we'll close on it. Who wants to read this one? Hemant, you want to give it a try?
Rich has AGI of 1 lakh and he donated 70K cash for former of university, 60% of limitation. And
Stop. Let's just stop here.
okay, ma'am.
AGI is $100,000. Let's just, put this amount in our mind or write it somewhere. Then they're donating 70,000 cash to the former university. What is it? Cash. First thing is we need to understand this is cash. Second, where is it going? It is going to the university. What is university? A public organization. Typically, they are all public organizations, right? So 70,000 cash to former university, 60% limitation should immediately come to our mind, because when we are talking about cash for a public organization, it's usually the limit is 60%. And they're also giving it here. Okay, next, start.
And 5,000 of his private foundation, 30% limitation.
Okay, so he's also giving something to private foundation.
And his current year, he can
One
deduct.
minute, hold on. So if it's a private foundation, if they're donating cash, how much is the limit? 30%, right? And that's what they're saying here, 30% limitation.
In the
Go ahead.
current year, he deducted 60K, 100K into 60%, and will be carried forward to 10,000K for his deduction subjected to 60% limitation, and 5,000 of deduction subjected to 30% limitation.
Okay, let's stop here. So in the current year, what is he doing is he's donating $60,000. Sorry, he's deducting. He can deduct up to 60,000. Why can he deduct only up to 60,000? Okay, Divyansh, can you explain me why is he can take only up to 60,000
Ma'am, because there are the 60% of AGI for the cash
category for public organizations?
for public organization.
Right. So and he has maxed out. He cannot go beyond that. So that's the maximum that he can take. So now, what are the Ayush? What are the deductions? What are the donations still available for him, but he cannot use them in the current year? Muskan, Ayush, you guys need to promptly answer, please. We cannot wait for so long. Are they there, honey? Go ahead, Muskan. Do you want to answer or Ayush wants to answer? But please don't make anyone wait. Quickly come on it. Go ahead. Did you understand my question? Were you guys paying attention? Anyone else? Vanna, do you want to answer?
10K of deduction.
Sorry, did you say something?
Yes, ma'am.
You got
Ma'am, as he can deduct 60,000, so
yes,
70,000 he donates. So
yes,
70,000 minus 60,000, 10,000 he can carry forward to next year.
but that's only from university. But he has also donated 5,000 to private foundation. Now, what should be done
That
with
will
that?
be, yes, ma'am. So that will be 5,000 into 30%, that comes to 1,500.
No, 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 no. Again, you're getting confused. Who is saying 5,000 is the AGI? Why are you putting 30% to 5,000 donation amount? Whenever we are talking about these limitations, they are related to AGI. Okay? Don't get confused, please.
Yeah, yes, ma'am.
So he's okay. Let's just go again here. 70,000 is what he paid. 60,000 is max he can claim. His AGI is 100,000. If his AGI was 200,000, how much would he be able to claim? 60% of that, right? That will be 120,000, double of 60,000. If his AGI is $200,000, we are not even talking about any carry forwards, anything. He has good amount of buffer. He can claim all of it. So he's not able to claim. That's why 10,000 of cash deduction, cash donation, and 5,000 of donation made to private foundation is going to get carried forward. Okay, he will carry those forward. Now let's see if he's not making these kind of donation, but he's doing it in some other way. Okay, Hemant, continue.
If Rich, instead of donating 5,000 cash in the
If
university, and
Rich, Hemant, please pay attention. What they're saying is if Rich had instead donated, not instead of
instead,
donating.
instead
It's completely changing the meaning of that.
okay, had instead donated 5,000 cash in the university and 70,000 to the private foundation.
Okay, stop. So again, let's just see here. So now what they're saying that university, which is a public organization, only 5,000 is going there, and is putting 70,000 in private foundation. Okay, yeah, go ahead.
The charitable contribution that could be deducted would be calculated as follows:
Mm-hmm.
5,000 fully deductible as 60% deduction, and
Correct.
70,000 contribution to the private foundation deductible lesser than 30% of the AGI.
So what is 30% of AGI? What is 30% of this?
30K.
Exactly, 30K. So you can take 30K, lesser of 30% of AGI or 60% of AGI minus contribution to 60% and all. This is the formula that we saw there. And then I said that this is a bit confusing, so we'll go over one of the example. Where was it? We saw somewhere now. Anyways, what they're saying is 60% lesser of 30% of AGI or 60% of AGI minus contribution to 60%. Okay, there was somewhere here. Where did we see it? Okay, we'll just go over that. I mean, it was right here. I don't know. I can see it now. Oh yeah, here. The limit is actually the lesser of 20% AGI, 30%. No, but this is for the capital gain. Okay, forget about that. We'll just find out. But that is what the rule is. That if it's to a private foundation, lesser, we can take lesser of 30% of AGI. Wait a minute. It's right here. Lesser of 30% of AGI or 60% for cash contribution. No, I'll find that out later. We'll go over that. But let's try to understand this for now. So 5,000 is straightforward. 5,000 is given to university and all, that can be deducted. That's fine. That's not a problem. Now the problem is what is going to the private foundation. That's where more restrictions are. So out of that 70,000 contribution, which is going to private foundation, what we are saying is it is deductible to the lesser of 30% of AGI, which is going to be 30,000, or 60% of AGI you can take, minus contribution to 60%. What is 60% of AGI? $60,000. Minus, what is the contribution to 60% limit organization? That is 5,000, because 5,000 cash is falling under 60% limitation. So that's 55,000. And he has to take only lesser of that. So he will end up taking 30,000 only. Either it has to be lesser of 30,000 or 55,000. Again, this is something which software will do it on its own, but typically what we should remember is 30% is taken for private foundations. So in the current year, Rich would be able to deduct only 35,000. Why? Because 5,000 is fully deductible, and then he's able to take 30,000 only, because the money is going to private foundation. It is going in cash. So the limit is 30%. It is money is going to private foundation. It is going in cash. So typically 30% limit will be applicable. So he can take only 35,000. So there is a big, huge difference. If the money has been given to university, the deduction was up to $60,000 in the first situation. Now he's giving the same amount of money. He's probably donating more. He's donating same. 75,000 he donated here, and now 75 again he's donating, but in a different combination. So the deductions will be different. And carry forward is 40,000. Obviously, with 75,000, if 35,000 is recognized as a donation, then 40,000 will be carried forward. And this 40,000 next year, he can take that as a donation, but they are subject to 30% limit, because when you are carrying it forward, you're carrying forward the nature of the transaction also. If that is a 30% transaction, we will carry it forward 30%. Is that clear? If it's not clear, maybe you open it up again, read it again, and I'm pretty sure it will be clear. It is probably too much to grasp all of that in one class. But if you read it one or two more times, you'll be very clear on that. We'll just close on it here. Services. We yesterday also we spoke about services are not deductible. One can put in 10 hours, one can put in 100 hours. You cannot put a dollar amount to that service. We cannot go and say that, oh, my time is worth $500 an hour. If I'm donating whatever 2 hours, I need a deduction for $1,000. And somebody else will go and say, well, my time is only like $5 an hour. Okay, so IRS doesn't want to get into all of that stuff. It doesn't matter. There's no time value given to that. But yes, any expenses incurred and all those can be taken as a deduction, especially if you're traveling, you're running around, you're doing some say camps here and there. There are medical camps, there are other things, and if you're going around, driving around, then what IRS is saying, say take 14 cents per mile. If you drove for charity purpose, maybe that somebody will say, let's go to the next village and all, we will do some camp over there, we'll do some charity. Fine. If you're taking your own car and going around, 14 cents is what you can take maximum. Any tickets and all are given. These are all event tickets and all. So we typically will go with the price. The value of a ticket is deductible contribution to the extent the purchase price exceeds the fair market value and all those things. But typically the value of the ticket can be taken as a donation. And we have already seen this. Carry forward can be done only for 5 years. All right. It's almost time. We're going to close on it here. Any question, comments? If not, then we'll close it here.